Testing 1, 2, 3. There we go. What's going on, everybody? Chris Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday. Oh, what is it already? The 19th of September, 2025. How are y'all doing? It has been a week, hasn't it? I guess it's just it's been a week of a month already, right? But we had earlier this week we had the Fed rate decision. Okay. Chris, busy sent you a DM and oh man, okay, thanks for letting me know, man. Yeah, I'll check that out today. What was I saying? So it is Wednesday. We had the Fed decision, and so we got the 25 basis point rate cut. I've been talking about that since the beginning of the year. Likely that would be our first rate cut. It would be 25% in September. We had some crazy stuff going on with jobs and whatnot over the last few months. And I said that unless jobs continue to deteriorate, we were likely to see, them hold flat here and maybe 25% next time. But we did continue to get breakdown in jobs. We had the big, huge revision, largest revision ever, almost 1 million jobs there over the last year, revised down. So, anyway, we got what we were looking for. We talked about this at the beginning of the year. Here we are. So another good call there. And so, here we go. Now, people erroneously believe that just because there's a rate cut, it starts, it automatically means that there's going to be a recession, or it automatically means that there's going to be all this money flowing in the markets. And it's really a lot more than that, guys. I've tried to talk about this multiple times in the past. But there have been, generally speaking, when we have a rate cut, we usually end up seeing a recession. And that's because just where everything's kind of flowing in, right? The rate cuts are a product of what's going on, basically the Fed trying to catch up to bad stuff. Okay. But when the rate cuts come and the economy isn't doing terrible, we'll see continuation higher, right? So if you think back to 1995, I think that was the most recent one we can think of here, where they finally had a rate cut cycle starting, right? And what happened? We got a slight bit of a pullback and then continued on into the dot-com bubble blow off there 5-6 years later, right? So I'm not saying there has to be 5 or 6 years now until we get, but what I'm saying is, there's a lot of information out there that suggests that, that a recession isn't potentially incoming right now. GMI over there, that's one of Raul's products, Raul Powell over there at, what's it called? Real Vision. They've been giving reasons why we could be seeing the beginning of basically an economic cycle, a bullish economic cycle, rather than the beginning of the downtrend, right? And so there's a lot of this stuff kind of coming. I posted the question last time to y'all: what if all this, because everybody's all bent out of shape with the what do you call it, the jobs revisions, right? Because it's been 2 huge job revisions over the last 2 years. And I said to you, well, what if that's like the worst it gets? What if that's the bad, right? What if that's the bottom of that badness and things start going the other way, right? Because it's a significant thing. And when you're looking at sentiment, everybody's getting all bent out of shape sentiment wise because of the corrections with those jobs numbers. So what if, the economy or the things have been doing well enough that even though we really didn't have those job creations that, the Biden administration said we did, basically, what if we kind of just worked our way through it? And that was the bad part of the cycle, but we worked our way through it. And so here we go with the good part of the cycle now. So there's a lot coming into, this last few months of the year. So I wouldn't, here's my thinking, guys, and I say this a lot. There's a lot of misinformation among the free areas of the interwebs, right? there's, especially when it comes to trading and markets and economics and stuff like that. Because what happens is the half-truths and the outright lies get regurgitated. They get repeated over and over again. And not just like right now. I'm talking about ever since I came in, going to be 31 years now. So even before, crypto is even a thing, right? These are a lot of what you see repeated out there is just, that's all it is. It's just stuff that's been repeated that isn't actually really all that true. Or there's a lot more nuance to it than what they get you to believe, right? And so nowadays, what do you have? You have these platforms, these social platforms with people who have just gotten into the market recently. They've never been through full recessions in the market, anything like that, right? They've never been in anything outside of crypto, something like that, right? They've been in a few years, and they're out here screaming all these things that have been repeated year after year, decade after decade, that aren't exactly true, or that, again, have a lot more nuance to them. For instance, again, the idea that once you start a rate cut cycle, that signals a recession. Well, not all the time. Yes, it is aligned more often than not, especially over the last, 40 years, 50 years, with the beginning of a recession. But that's because the rate cuts have been a product of what's been going on, right? So the Fed finally says, oh my God, we got to do this, we got to do this, right? But there's so many things different about this cycle right now that could end up having it doing something different than what you might be expecting. And, so if you're positioning yourself based on that other stuff without some caveats in there, there's a good chance you could end up getting left behind. So I just want you guys to be careful about that, all right? Now, I talked today, the title today was the Russell 2000 Small Caps Index hits a new all-time high. What does this mean for markets? Now, I've talked about this before, okay? And what we've talked about before is the small caps, right? Why do we look at them? Because it's sometimes the small caps will rally into a recession, but most of the time what happens is basically what we're looking at is if the small caps are doing well, that's usually a good sign. Why? Because the small caps are often seen as this barometer for, domestic economic health, if you want to call it that, because, precisely because they're less global. So they're more sensitive to these credit and liquidity conditions, right? Basically, they're more sensitive to what's happening in the US than, your mega caps, which are global, right? So when we look at that, if you're hitting new all-time highs, and the Russell 2000 stock, by the way, ticker is IWM, okay? Or if you trade futures, it's RTY. But when you're seeing new all-time highs in the IWM, usually that's going to signal risk appetite, supportive liquidity, not that the market's pricing in any kind of imminent recession. So this is why we watch. This is why we watch the small caps. The only other person that I've seen that's really been bullish on the small caps since about the same time I was Tom Lee over at Fundstrat. And so we'll look at the chart here in a minute, but there was a point at which I said, listen, this is probably the low here. We're going to head out, new all-time high incoming. And we did. And then we pulled back, and now here we are making another new all-time high today. Okay. So as far as that goes, again, when you start looking at all these things, and Julian from GMI and a lot of the stuff that he's talking about, I've reposted a couple of his things there on X. I keep wanting to call it Twitter. Okay. So he's posted stuff out there to giving this reason why we could be entering, like I said, the beginning of a new bullish cycle rather than, bullish economic cycle, rather than ending one and going into a bearish cycle. Okay. So this is kind of what we look at. Now, the things to keep in mind is that just because the IWM makes a new all-time high, it doesn't, automatically signal that we're not going to have a recession, right? Stocks are forward-looking. We have to always remember that. And sometimes, as I mentioned earlier, they do rally into recessions, especially when there's policy easing, stimulus, or liquidity support, stuff like that. There's also the lag effect, okay? So small caps can make the new highs there before the economic data turns down. And so like 2007, the S&P 500 was still near the highs when the U.S. was already tipping into recession, right? So, but that's the S&P 500 there. That isn't small caps itself. But again, you can make the highs before, again, kind of rallying into those highs before you get the bad information, okay? Or the bad economic data. Now, the composition of the Russell 2000, because of what it is, right? It has heavy exposure to financials, industrials, regional plays, things like that. So liquidity injections, when you talk about things like rate cuts, fiscal spending, stuff like that, can lift those areas even if the real economy weakens. Okay, so it's not a guarantee that you can't get into a recession, but most often you're not really seeing that. Let me see here. So if the IWM, the small caps, the Russell 2000 is making new all-time highs, then it greatly reduces the probability of an ongoing recession narrative, right? Because it shows that the credit-sensitive small caps are being bid. But it doesn't guarantee no recession. It just really signals that right now, markets are really leaning risk on. And so this is something you want to watch. God, should I be adding to positions? Should I be entering new positions? Well, if the IWM is continuing to print new highs, especially new all-time highs, yeah, generally speaking, you have a lot more support for doing so. But again, nothing is guaranteed in trading. Nothing happens. You get no guarantees in trading. Nothing's 100% is what I'm trying to say. But as a trader or as an investor, what you're looking to do is you're looking to enter the market when more things are on your side than not. You see what I'm saying here? So a lot of retail come in thinking, oh my God, things need to be perfect. This needs to be perfect, whatnot. And it doesn't happen in the markets. What you're looking for is a series of things that happen to say that you're more likely correct in whatever you're thinking than not. And that's what you're doing. You're playing probabilities. If you can't figure that out, don't be in the market, y'all. Don't be looking for perfection in the markets. You're going to get lost. You're going to be left behind like constantly. All right. Let me see here. That said, so we do have a new all-time high. Let me go ahead and pull up IWM here for you guys. All right. And let me see. Oops, almost hit remove on that. What the heck? Oh, come on now. Why are we not popping up there? Hey, there we go. We got it there. So as you can see here, back at this point, when we were coming into this, I said we'd probably get a dip here, and we were looking for that to confirm as a spring to suggest that we were heading up, right? And that's exactly what happened here. As you can see, we got up here, we got the move up. So my count right now says we got like a 1, 2, 3, 4 is a triangle, and then 5, and then A, B, C is B, and then 1, 2, 3, 4, 5 is C is a flat here, right about a 78.6 pullback. And here we go, new all-time high. Now, I wouldn't be surprised to see this kind of pulling back here or, potentially going up a bit higher before it does pull back. And that initial area I would be looking for it to pull back would be around this 215, 217 kind of area here. Low volume node, yearly pivot, this area right here. But that pullback doesn't mean, oh my God, recession. It just means, hey, pullback, right? It just means like this was a big pullback here. But that's what we're looking for before we kind of head up higher, right? And so we're not going to have a recession right now anyway if the IWM continues to break out higher. And here's the thing, if we've got this sitting here as a flat, this necessarily means that we should be overall breaking out and heading higher there. So that's something I would watch. That's something I do tend to watch. I talk to our students over at the TWC Academy, Trading Academy, to watch there. Thibaswani, what's up, man? He says the market guarantees nothing but pain. Risk management is your only anesthesia. There you go, right? And oh, by the way, speaking of TWC, we're actually celebrating 8 years. We went in business September 11th of 2017. We've been in business for 8 years, helping traders become more consistently profitable, teaching them how liquidity develops in charts. You see, most things that what you're going to get when you're following people or they're teaching you something are going to be, which is nothing more than basically parlor tricks, right? So most people out there have no real clue what they're doing. And a lot of people are actually just repeating stuff that they found somewhere else or renaming stuff that's listed elsewhere, right? But it's really just parlor tricks. They don't have this understanding of what they're explaining to you. They're saying, oh yeah, listen, if it does this, you can do that. And that may work, okay. But I'll tell you what right now, nobody is getting rich off that type of stuff, right? And I know if y'all are here, you're probably thinking, man, I want to get rich. I want to make money with trading, right? That's why we teach you what's underlying the market, how it's working, why it moves the way it does, how to exploit that to create consistently profitable returns, right? Does that mean you're going to get every trade right? Hell no. I posted something the other day on X there that basically said something along the lines of a high win rate is not a badge of honor. It's more of a warning, right? And what does that mean? It means because people with high win rates, if they're legit, usually have very poor or non-existent, risk management. And that's how they get the higher win rate, right? They have the price pulls back really huge, right? And it may pull back like stupidly far. And then eventually it goes up higher, right? Because right now, guys, we've been in a secular bull market since the stock market bottomed there in Q1 of 2009. We've had one recession, and that was the couple of hours or whatever. I joke about that, but that was basically when you had February into March, and we had that V drop and that recovery for COVID. That's really the only recession that we've had since 2009. So when somebody shows you, oh, I've got this high win rate, what they're saying basically is, listen, we just kind of buy in there and we just hold. And it dips down pretty far sometimes, but eventually it comes up because overall the market's continuing to go up, right? Here's the problem with that. Because you're not using proper risk management, the one time that it does go against you, it will go against you. And either it will liquidate you, you'll finally give up after a long, long time of it going down, something along those lines, right? And what that's going to do is that's going to all that wins you had that gave you such a great win rate, totally erased, right? Proper risk management necessarily means that you're going to miss some trades. You're going to come in a trade and it's going to hit your stop loss before it continues in the direction that you wanted it to go. But remember, your stop loss is not the big reason for your stop loss is because at that point, it should be telling you, listen, what you thought, your thesis coming into your trade, the reason why you entered it is no longer correct, exactly as you had it set out. That's what your stop loss tells you. It tells you that what you thought was going to happen is not happening. That's why you get out at your stop loss. Now, along with the other benefit of it is that it will save you money, right? Your stop loss saves you money because it keeps you from taking that loss. You don't have to hold a position for 5 years until it goes back up the other way. As Fibaswani's saying here, what do you say? One of my best years in cattle was a 31% win rate. But see, that's what proper risk management does for you, right? You're going to have lesser of a win rate, but when you win, your wins are generally going to be a lot better than your losses. And that's why you can continue to do well and make money and be successful as a trader. All right. What's up, Bamboo? Bamboo said trading without a stop loss and you are not trading but gambling. 100%. Right. But as retail traders, we tend to come in and we're always like, well, who's got a great win rate? Right. Again, that's the whole perfection mindset. We're thinking, oh my God, the more perfect they are in their win rate, the more money they're making. And they might make a lot of money on a single trade, but the problem is they're going to lose a lot more on that trade that they lose. Okay. Again, if you need more proof of this, Remember Caroline over at Alameda? Remember before they went down, she had done this. You can look it up online. You can find it online. She had done this interview. Somebody's interviewing her, and she's like, "Well, we don't use stop losses. We tend to do other things." And then you find out later that they were $1.2 billion in the hole in their trades. Their trades were 1.2 billion with a B dollars in the hole, guys. You understand that? So, if you're trading, it's infinitely important for you to learn proper risk management. Okay. Number one thing is your exit. Number two thing, which is really part of your number one thing, is proper risk management. Number three most important thing is your entry. Yeah, so your entry is not even in the top one or two most important things when you're trading. And there's a reason for that. I'm talking about this a lot more lately because I get a lot of flack from people that don't understand what I'm saying here. Listen, and I had somebody said, "Hey, listen, have you read Market Wizards?" And there they give good reasons why your entry is more important. I said, "Yeah, I've read it. It doesn't change what I'm saying. Listen to what I'm saying here. Okay? It just takes a little bit of logic. If you have a good entry, right, but you have a poor exit, that exit can ruin that entry, right? It can ruin what you were going to potentially make. If you have a poor entry, but you have a good or great exit, you can mitigate or even salvage that entry. It's all about the risk management, right? And your exit includes not only your take profit, but your stop loss. Your stop loss is also your exit. Are you guys, does this make sense to you guys? Because this is, again, it's you often lose as a trader, not because you're stupid or because you don't know how to figure things out, but because you hold strongly to those things that aren't really true or that don't make a whole lot of sense. It sounds on the surface, it sounds like it makes sense. It sounds logical. It sounds like, yeah, okay. But if you really think through it, you go, oh, no, that doesn't make sense, right? Because at the end of the day, right, you don't control where price goes. Absolutely do not control where price goes. You have a thesis, an idea of where price may be headed, and that's why you're entering, right? You put your stop loss where it is because you assume that if it goes through your stop loss, then what you thought was going to happen isn't happening, right? That's how it starts out. But you have no guarantee what price is going to do. The only thing you can control here in the markets, right, is if it comes against you, how much you lose, right? Because you can't, first of all, you can't guarantee that you're going to make money. How many of y'all have entered a trade and immediately the trade went down and right from where you entered and it went down and didn't come back up and you got knocked out, right? You lost money. You can't guarantee that price is going to go up. You can't guarantee that if price does go up that you're going to exit with some profit, right? But what you can guarantee is if price comes against you, you can limit how much you're losing with that stop loss. Okay? So if that's all you can control, why the hell are you so focused, so strongly on everything else and so little on your risk management? So little on your proper exit? Doesn't make a whole lot of sense, right? This is where y'all should be doing this. Nodding your head up and down, yeah. So that's what we're looking there with the IWM. All right, so IWM overall should continue higher. Pullbacks, I believe right now are still, reasons to be buying when it comes to the IWM. And as long as it's continuing to go higher, the idea that a recession is here makes absolutely no sense, right? Let's jump over to Bitcoin. So Bitcoin's broken out above that 117 level that I was looking for it to do, right? So right now we have 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So it does appear to be this is a what we call a double zigzag, a WXY correction. All right. Looks like a spring here below the range. And we've kind of continued up. We've broken out above the monthly pivot. We did that with a larger candle spread and a bit of a spike of volume there, which is what we look for, and a close above it. So everything's looking great. If my count's correct here, this 1-2 gives us a wave 3 at about 155,000. It gives us a wave 5 up there at around 171,000. Now, it doesn't mean it has to go that high, and it doesn't mean that it can't go higher. But generally, based on how far wave 3s, wave 4s, and wave 5s generally tend to move, those are the targets that we're looking at. Now, locally, 125, 130, and 135 would be kind of like the next targets that I'd really kind of look at. Ultimately, right now, as long as we're staying above this 113 area, we should be looking to head higher. All right, and that 113 area is the pivot here on the monthly, and it shows up on the daily time frame. Locally, you know, we might get a push up here to 120, 119, 245 or so, and then a pull back to there, and then the breakout higher. You know, that's often a setup I look for. But if we keep pressing up through that R1, we're going to look up here toward the range resistance up there at about 123,000 as the target before a pullback and then a move. But nonetheless, we've got a lot of bullish movement here on Bitcoin that we were looking for. We got through the levels we were looking for. Okay. Contrary to what everybody said, right? I still see people out there talking about the top is in for Bitcoin. And that's significantly less likely at this point now because of this move, this breakout here. Obviously, nobody can guarantee anything, right, when it comes to markets. But again, if this is 3 as it appears to be on this move down here, the odds are significant that we're going to get a breakout to a new all-time high. Here's Ethereum. Now, Ethereum, I talked to y'all back here in April about this particular trade, this setup here. Okay, getting in there right about 1630 or so. Stop loss just below this swing low here. And then the target being just right beyond this swing high here. See where it is right here in relation to the previous all-time high right there. And that trade paid off, as you can see here. This is a 31R. That means you made $31 for every dollar you risked if you entered there. Enter, stop loss, and target where I had them and just held. And that's just since April, guys. That's just 5 months. Okay. Now I do these every so often publicly, but a lot of these are done for our students, you know, in the Trading Academy, right? I've got a pretty good record. We've got some ridiculous returns over the years, but usually you can expect at least a couple over the course of a year. A couple of really, you know, incredible trades like this are significantly better, right? We've got a couple of trades I put out here in the last week or so, I guess, that have huge potential returns on them. Like for most people, life-changing returns on each of them separately. Okay, so we do this. This is one of those things that you kind of get, you know, being in, you know, with the Trading Academy. You don't just learn how to trade, right? You don't just learn how to read the liquidity and understand how and why it's showing up. Okay, you don't, you know, you learn how not just to read it, but how do you trade it? Because, you know, anybody can be taught to read it, but how do you trade it? When do you know to enter? What kind of specific setup should you be looking for and why? You know, those are things we teach. But also, again, you get the live trading, you do all that as well. But you also get, you know, these trades that I put together. And like I said, usually there's at least a few of them each year that have just absolutely ridiculous returns on them. Let me see here. Troy, you took a position in Naka this week? Yeah, man. Yeah, and then Sol at 9. Yeah, you know, again, Solana. I talked about buying that, publicly there on that windy Osha or whatever, when it was just around $9, when everybody said it was the end of the end, right? What's another one? BNB. I did that one publicly, right? BNB token when it was 200 and some change. And everybody thought for sure it was going to fall through that level and just fall way down. They thought it was the end of it. BNB, Binance was, dealing with the U.S. Department of Justice, and CZ was having all his issues, and going to end up going to jail and all that stuff, right, in prison. And everybody thought that was the end of it, right? And instead, we made a new all-time high, over $1,000. Made multiple new all-time high, but $1,000, over $1,000 since then. That's a 5x, right? When everybody was talking about it going down. PayPal. What else have I done? Square, Robinhood. I think we were talking about that one really, really low when it was accumulating. Same thing with PLTR before they made these huge runs. So, I mean, my goal, what I see as my job at TWC is to help you do that yourself. Yes, I'm going to do it for you throughout the year as well, but I want you to be able to do it. I want you to be able to, because it doesn't affect me negative. Everybody's like, oh, but is that going to hurt you? Why would it hurt me? You are not big enough to make my trade, bad when you get into it, right? You need to learn how to do these things. So you stop listening to all the nonsense that's online. But this stuff sounds like it makes sense a lot of times, right? On the surface level. Do I believe in the tokenization of Wall Street on Ethereum? Robinhood took the first step and is doing it. Will others follow? If so, then your man Tom Lee will be very, very right once again. Yeah, no, I think everything's being tokenized. Yeah, I mean, that's where we're headed, right? So if you guys watch Beards of Bitcoin, which is the show I do every Wednesday with Andrew and Tillman from Arch Public, right? We do this show, been doing it over a year now. And I've been talking about, or we've been talking about, right? For for almost the whole time now, because we were looking back then at the Texas exchange that's being put together there in the Dallas area, right? And the idea with that exchange is 24-hour exchange. Well, how are you going to do 24-hour trading? Well, the easiest way is going to be through tokenization. So when you look at that, right, and then you look at what Robinhood's doing and what others are starting to do, yeah. I mean, I think it's inevitable that we get to, it's inevitable, I think, that we tokenize everything. I think it's inevitable that exchanges, all exchanges go to 24/7. And what makes things interesting then is, well, so stock companies, right? They do their earnings typically before or after the market hours, right? Well, if you're able to trade 24/7, and right now, if you trade in your pre-market hours, your trade has to be closed during pre-market hours, right? You can't close it during regular market hours or aftermarket hours, right? If you are opening a position in aftermarket hours, it has to be closed in aftermarket hours, right? If you open a position regular trading hours, it has to be closed in regular trading hours. So what happens when it all goes 24/7? All of a sudden, you start seeing more volatility building up around these releases, which is interesting because Trump's talking about, hey, we don't want these, I don't want these, don't think we should be having these quarterly earnings calls anymore. So there's a whole big change coming in the way the markets are working and the way they're potentially headed at this point. Okay. Yeah, that's you're saying it right there. Trump is trying to end the quarterly reporting too. Yeah. So things will be a lot different than people like myself and Fibbo, they've been around for 30 years. A lot different than what we're used to, even, right, with the way things are. Definitely some interesting things coming up here. And now what does that mean in terms of markets? Well, I think that means that the markets start shifting a bit in the way in which they go, right? If everything goes to 24/7 and you do away with quarterly earnings, the way in which people approach markets changes a bit. Some people, right? A lot of people. And naturally, I think that ends up having a significant potential effect on the way the markets overall act. Lots of things to consider coming up here. So, again, the things that we teach over at Texas West Capital, I think, are infinitely more important now with that in mind. Because a lot of these parlor tricks that people use, they kind of teach you and they, charge you money to learn or whatever, are just that, parlor tricks, right? But there's no real understanding of what's actually going on beneath the level. Now, you can listen to, some people claim that they created some algorithm that runs the markets. And if you believe that nonsense, I have some oceanfront property in Arizona I'd love to sell you. Okay? I can't even, right? It's just nonsense. It's just nonsense, guys. It really is. But people want to believe. People want to believe, right? And so that's what a lot of people in life try to sell you, not just with trading, but with anything, right? They sell you what you want. They understand that you want to believe something ridiculous, something crazy, right? That as human beings, we tend to do that. And that's what they sell you, right? That's what they sell you. They sell you what you think you want, what you think is going to make you better or is going to improve your life or whatever. That's what they're selling you. And that's why you buy so many of these things and you end up being a lot more upset with your results than what they are. Sorry, guys, getting some, I've got this open on a few different computers here. Let me close it off here so that doesn't pop up again. All right. So with Ethereum now locally here, I told you all I was looking for this breakout above 46, 64, 43 here. We got that and a bit of a pullback here. We should be heading up to a new all-time high. This looks pretty clearly like 5 waves up, and this is 3 waves down. So that would give me a 1 and a 2, which means a minimum expected wave 3 target at 58.28.5. Minimum wave 5 target at 62.90, 66. Just off this local. Does that mean that's where I believe we're going to end overall? No, this is just the next way up that we're working here. But I do believe that's what's incoming here as far as Ethereum goes. Okay? By the way, if you're worried about coming into TWC because you think, oh my God, it's too hard, too difficult for me to learn, or you think, well, I've got my own thing and it's not really going to help me any. Listen, folks. We have everybody from absolute beginners to people who've been trading a while and have their own systems and styles and algos and stuff, right? And they all always learn something with us. That's the thing, right? They learn something that's going to make them a better trader. And that's always the goal, because otherwise, what are we doing, right? So Bernardo says TWC is the best investment ever, people. Well, I appreciate that. Obviously, I like to hear that. And, and I consider and I can tell you all day that what we do has the ability to change your life. But then you're going to say, oh, well, it's your thing. So, of course, you're going to say that. That's why I post these things every so often, right? And by the way, you get access, if you join us with our Liquidity Cartography program, you get access to Fibbo's stuff too. You get to learn his system. He'll teach you his system the way that he does. He'll also be posting his trades in there for you guys as well. So, I mean, there's a lot more, but I think Fibbo would probably agree with me. I think one of the biggest perks, one of the biggest benefits of being a TWC is the community that's there, the people that are there. And now, not everybody speaks. It is what it is. I'm going to tell you what, guys, right now, if you are not an active learner, you are never going to get as good as you want to get at anything. You have to be an active learner. You have to go in, you have to discuss, you have to ask questions. Psychological study after psychological study shows that if you want to learn in the best way possible, you have to do those things. The less of that you do, the less likely you are to learn to the extent or anywhere near as quickly as you want to. So I'm always telling people, listen, if you're going to join us, speak up, ask questions, introduce yourself, talk to the others in there. They love to share their trades. They tell you what's going on. If you got a question on why they entered or did a certain thing that's not really explained well, they would. I'm going to tell you, these guys are going to tell you. They love to share it. They love to be a part of it because they've learned. And they like sharing, contrary to what people believe. There's just nonsense that people say, oh, those that can do and those that can't teach. No. Usually what you find out is those who learn to do things really well often feel a burning desire, a need to teach that to somebody else. Most people are that way. Right? And so, when you figure a thing out, you want to help other people figure it out, don't you? I mean, I think most of us are really kind of feeling that. So take advantage to learn, right? Learn from the people that have been in 30 years, been through stocks and crypto and FX and metals and energy and cattle, stuff like that. Yeah, I'm talking about you, Fibbo. Fibbo does energy now, but he started out in cattle and grains. But you're talking about real life experience here. And you're not talking about somebody that just learned yesterday or a year ago. Because those people that just learned a year ago or 2 years ago, it's going to take them a couple of cycles of going through recessions and downtrends where before they figure out, okay, this is the real stuff overall that we really need to pay attention, right? You're going to have to continue to better themselves. Fibbo says, if they ever code an algorithm that claims to measure my emotions, I'll clap politely for the parlor trick and then get back to trading the real thresholds where human mood actually shows up in price. Sad says his backyard is not big enough to trade cattle. It's funny you say that because, again, the company is Texas West Capital. And I've, for years, I've went back and forth over the idea of buying a longhorn cattle and just using it as the mascot and putting together like actual commercials with it. I've never gotten around to doing it, but oh man, that'd be something, wouldn't it? I could be like those car salesmen, right? Have y'all ever seen those car salesmen, your local car salesman commercials? And they always do some wacky, zany stuff. Yeah, I'll just do that. But hey, it's TWC, right? It's Texas. I'm in Texas. That's where we're at. That's where I'm from. That's what we do. Sats, if I do it, you're going to have to come be my cattle wrangler, all right? So Ethereum, again, I think it continues to look good. We'll probably get a rally up into this all-time high area and then a pullback right probably about where we are here, 4,500 or so, and then we'll get the breakout higher. If I'm looking at this, it looks like a 1, 2, 3, 4 is like a leading diagonal. We'll get a 5. So as long as this low holds here at around 44.15, it gives us a pattern target. I can't even do it right here. Let's pull it out of the way here a little bit. Right up there around 5,000. And so 5,000 is right there around that 49.55 at the all-time high, right around the R1 pivot. So again, different things I teach at the Academy, these things make sense, right? You get your 5 waves up and then you get your pullback, then you break out higher. And that will have a good chance of overextending these targets. Like wave 5, wave 3 may actually overextend towards 6,300. And then wave 5 may overextend up here towards 6,600 or so on something like that. If we got 5 waves up here and then a pullback and then a go, we could see something like that. There's nothing but wind and tumbleweeds over in Olton, Texas. But yeah, so I mean, again, I don't think that the top is in yet. I think we've got further to go. One trade that I gave y'all here back where on August 6th, I gave y'all this trade. You guys can look it up, August 6th. I said, why aren't you long Tesla or something like that? It was about $320, $321 at that point. And in case you haven't been paying attention, we hit an all-time high yesterday. Or not an all-time high, but a high off that yesterday. of 432.22. Basically up 30 somewhat percent, 33 plus percent there, or 30%, something like that so far. Yeah. So again, doing really well on that. I think there's a good chance we could ultimately see this give us these 5 waves up here toward 492, toward the all-time high. And what would that be? That would be 5 waves up and then a pullback and then a breakout higher. So again, the same thing we're looking, on other things. It's that rally into the all-time high, a pullback, and then a breakout. And there's a reason this works, guys, and why it happens most often. Again, not every time. Sometimes you just get the breakout. But I would talk to, what was it? Was it Wednesday's class? Those of you that are here, Wednesday's price action class, I think it was. I was explaining why price might look like it's just popping straight through rather than running up to the all-time high and pulling back and going out, right? So this is what we do. We talk about, listen, things are going to happen for this reason. This is what's actually going on, why you're getting this price action that you're looking at. Because my belief is the more you understand this, the more you can start to develop your own style of trading. The thing that works for you, whatever kind of time commitment you have and how much you do or don't want to spend, how much time you do or don't want to spend trading and things like that. Your goals, your current wealth and financial position, and your short, mid, and long-term wealth and financial positions, right? So, yeah. Let me see here. Fibbo, have a great day, man. Let me see here. So again, we're just, kind of continuing to do the things that make sense, right? The things that are repeatable, the things that you need to be doing, right? Otherwise, what are you doing? You're just kind of jumping around and bouncing around. Here's BNB. Remember I told you right here? I said, I printed right there. I said BNB monthly. It would be a shame if price just cleared the path immediately above and were to break out above the descending resistance, wouldn't it? That was my way of saying, listen, we're likely going to break this out. This is going to hold here. Everybody at this point, that was what I was talking about. Everybody at this point was thinking it was going to break down, fall through this big candle down here. My thesis was the other way. And here we are again, hitting that $1,006.88. That's an easy, basically 5x there. Something like that, right? Yeah, I think it was right around 200 and something there was this monthly candle right before it broke out. But what I was talking about, I said, wouldn't it be a shame break out there, right? Because I said, would it be a shame if price just cleared the path immediately? That was the prior candle. See this where it gaps up there, you've got this wick to the top side. That's what I was referring to. It would be a shame if that just cleared the area and set up the push up through. That's what I was talking about. So there it is, right? Let me see here. Solana. Seems like y'all always ask the same ones every week. Let's see here. Where are we at with Solana? Solana's been amazing. I mean, imagine if you got in here when I said you should be buying it here when it was $9 and some change, right? Imagine if you bought it there and you had the wherewithal to actually hold during this whole time up, right? Imagine. Because right now, what I'm looking at here, that would basically be about a 5,846% rise in price. Because based on the height of this pullback here, we've got a pattern target around 554 for Solana. That's the pattern target based on the height of this pullback here. So basically speaking, I think I've got something like a 1, 2, and then a 1, 2, 3, 4, 5. 3, 4 is a flat. That's potentially the fifth wave breaker. Now it could go higher. We could get some sort of blow off top stuff like that, whatever. But I'm looking up there toward 554. So imagine had you held on to 9 and just continued to hold on as this went up. Okay. Gray, what's up? He said a few weeks ago, you looked at HUT 8. It bounced off your yearly pivot and has done well ever since. Yeah. We also, I also publish a weekly Bitcoin miner stocks report. You can get that at bitcoinminerstocksreport.com. Okay. But that goes out every Sunday. And that has 18 charts, I think, in it. 17 miners, and then the WGMI, which is the index, the miners index. So it's got like, CoreWeave and Riot and Mara and Bitfarm and eBang and or eBon, I guess is what it's called. All those DGXX, all that there. How do I find time for all this? I don't sleep much. Oh, by the way, if y'all aren't subscribed to the Market Breakdown, get subscribed to it. It's a free daily newsletter, guys. It goes out every evening, Monday through Friday. It's at themarketbreakdown.com. I've recently changed it up a little bit to add even more actionable information for you. And so, yeah, a lot of stuff to look at, a lot of explanations. We've got, sections where we say, listen, if this is doing this and this is doing this, then you should be doing this, right? Everything to kind of help you be, a better trader. And of course, off that, I've got my Applied Socioeconomic Theory newsletter, which goes out every Friday. That'll go out later today. That's free as well. You can sign up. When you sign up for the Market Breakdown, I'll probably give it as an option to sign up for that as well. I do. Oh, man, listen, one thing you guys should definitely be subscribed to. I got another free one that goes out 7 days a week. And it's one actionable trading thought every day. Goes out first thing in the morning, like 7:30 a.m. Central. And that's called Trader's Edge Daily. You can get that at tradersedgedaily.substack.com. I haven't got its, tradersedgedaily.com set up yet, but you can get on that. And basically, what I do with that is, I told you that there's a lot of free information out there that's, half truths, outright lies, stuff like that. So my goal with that daily, that 7 days a week, you read it like in 30 seconds, guys. It's quick, it's easy. Read at the beginning of your day. It gives you a little actionable thing you can do to help you become a better trader. But I do that to combat all the really bad, negative, crappy information that you guys are falling for out there that you don't understand is not, either correct or there's nuances to it that they're not telling you. And so, again, all these things are out there to help you become better traders. We do have a paid newsletter we do on Saturdays, and then it does an update on Wednesdays that gives trade setups in it as well. That's our paid Market Breakdown newsletter. But, almost everything of what I do is free out there. And if you want to learn more, if you just want to trade, you can get in with that. If you want to learn more, you can join us at Texas West Capital, the Trading Academy. And you can actually learn to do these things that I do every day, guys. But let me break it down for you, though. There are no shortcuts. Like any other skill, it requires that you put in the effort, the dedication, the commitment, the focus, the consistency in practice that you have to do in order to get better at a specific skill set. And trading's no different. Too many of y'all, you go out there, you think just by buying it or whatever, that it's going to just, I guess, through osmosis into your subconscious, and you're going to know what's going on, right? Lay your head on your laptop or something, right? Just kind of soak it all up. You got to do the work, guys. But we've got way too many people that are saying, listen, what I learned here has changed my life completely with trading. Prior to it, it was this way. Now we're doing this way, right? I don't know, guys. I guess when I look out there, if I knew the things that I know today when I first started, that's the way I kind of approach everything. So when you're getting information from me, okay, whether it's here or through one of the newsletters or through the Trading Academy or whatever it's through, right? It's always with that mindset at the top, right? It's always with, if I was just starting today, what is it that I would want to learn? And also, what is it that I don't know that I need to learn, or that I don't know that I need to know? Things that you learn, 10 years down the road, and you go, man, I didn't even know I needed to understand this. But oh my God, my life is so much better as a trader because I understand that now. Okay. What do you mean? No, themarketbreakdown.com. That's the link for it. www.themarketbreakdown.com. Right? Let me see here. I'm going to try it real quick here just to make sure it works. Down.com. Yeah, here we go, guys. Here's what it looks like. I'm going to put it over here for you to see. All right. That's what it's going to look like there when you get to it there. You just drop in your email right there. It's free, 100% free to get it. Like I said, there is a paid upgrade if you want to do that, if you want, trades that we're looking at. And these are different than what we do with, for the most part, are different than what we do with the Trading Academy, which has its own set of trades and things that are going in there. Kimasabi says, you say there are no shortcuts, but getting a trading mentor is the shortcut. Okay, yeah. All right. Yeah, that would be the shortcut. Yeah, exactly. It's one thing that I've had to do throughout my life. Some people can learn to trade on their own, guys. Some people can. But it's a very, very small percentage. I was not one of those. I didn't learn. I was too stuck on the things that I thought the way trading had to be. And I didn't understand about my own psychology at the time, or my own emotions, and all these different things, right? So it was only because I got a few mentors along the way that I was able to get where I am today. But those that claim that all you need to do is buy a certain book and that's it, and you become a trader. Well, the reality of it is most of us aren't wired that way, right? We need a little hand holding. We need somebody to make us accountable. Right? That's the reality of it. If everybody could do it on their own, we wouldn't have 90 plus traders being out of the market in the first 3 months they join, right? Having lost everything. So, again, there's things that seem to make sense. And then if you think about it logically, doesn't make a whole lot of sense. Okay. I have a typo in my YouTube description. Well, thank you. I'm going to have to figure that out, my man. I have to figure that out there. It's always something, guys. Let me see here. Just kind of going through your comments here. Luke, what's up, Luke? He says, love the Trader's Edge Daily, constant reminders of what to focus on. Yeah, that's the whole goal there, right? The idea is to give you something quick that you can read, but every day is different. Like we have System Sunday and, and whatnot going through every day of the week. So, each day is a different topic. But each week is going to be another look into that topic on that day. And, again, overall, the goal here is to help you, hopefully, slowly over time here, start learning what really makes a difference as a trader, and the things that you have to know versus what you're going to read most of the time for free online that everybody regurgitates, right? The other way I can say this, guys, you'll notice I talk about trading a lot different than most people out there. And I think that's a good thing, because what you'll notice, especially with this whole thing of social media, is that what you notice is a lot of your big accounts repeat the same information. They all repeat the same information, right? And yet most traders are still losing out in trading, right? So if you're thinking the way that most people are thinking and trading the way that most people are trading, it only stands to reason that you're going to get the same results that most people are getting, right? And what result do most traders get? They're out of the market within 90 days of entering the market and having lost everything that they put in, and sometimes more, often more. Right? So, again, it's like, listen, Am I trying to actually learn to trade, or am I just sitting here saying, oh, I'm such a great trader, I'll figure this out, no problem. Yeah, I posted a tweet today, kind of mentioning that we had this thing going on, this 8 years being in business, celebrating here, TWC, and the discount we're giving as a result of that. And basically the tweet says, listen, institutions, right, spend millions and millions and millions of dollars a year teaching their people how to trade. But retail comes out and thinks, oh, I don't need to do that. Again, do the thing that the people who are winning are doing, right? And, whether it's us or somebody else. But if it is somebody else, make sure you're paying attention to what I'm saying here and make sure that they're giving you this kind of information. Because if they're not, the odds are they're showing you a parlor trick. They're showing you something that might work sometimes. And without any real understanding of what's going on with markets, you don't know when that's going to work or why it's going to work when it does. And you end up going in blind. That's why most people that go in and they just learn somebody's personal trading system, most people don't make money with it, right? Because there's no context for what you're learning. There's this old adage, good traders trade setups, great traders trade context. And that's what we teach. We teach context. We teach you to understand, not just, listen, here's the setup, but why is this setup working? What's going on at the different levels within this setup that suggests that it's more likely than not going to play out? What things should I be looking for as this setup is developing to give me this understanding of what it should be, right? So like I said, I would love for you to join us. One of the best things of what I get from this is I get to meet people from all over the world. And that's fantastic. But again, even if you decide to go with somebody else, make sure that they're giving you this level of what I'm talking about. Because otherwise, for most people, you're going to end up, being upset about the money that you spent, right? And money you spend you should be able to look at that and go, well, if I'm spending this, it's not a sunk cost, right? It's not just a cost. It should be an investment, right? If you're getting into trading or you're learning any skill set, right? The money you're paying to learn that skill set should result in a return, right? It's not just simply, oh, I just paid this and it's a cost out of pocket and it's an expense. It's not an expense. It should be an investment. That's the way you should be looking at it. So when you're, maybe deciding who you should, maybe that you want to join, keep thinking about that. Think, okay, well, this is an investment and I should be able to get a return from it. That's what you're looking for. But again, at the end of the day, it doesn't matter whether you're joining TWC or anybody else. You have to put in the focus, the commitment, the discipline, the time, the effort that's required to learn the skill set. You can't just pay the money and expect that it's just going to appear and happen for you. All right. Let me see here. Somebody was asking for another one here. Oh, another chart. Aster? Is that a crypto? Aster, A-S-T-E-R? You guys got to help me out here. There are millions of these things. Tens of millions. I don't know what they are a lot of time. Is that what you're talking about there? Aster right there? All right. I'm going to assume that's what it is there, my man. Let me see if we can go ahead and get this set up here for it. What's today? The 18th? No, today's the 19th, isn't it? Yeah. And then this is Aster USDT. Let me see here. Frank, my man, Frank here. All right. Aster USDT. Well, that's a heck of a monthly candle. Let me zoom in a little bit more here. Give a daily candle. Is it brand new? How dare you give me something that has absolutely no anything here? You're killing me, Smalls. The best I think I can do for you at the moment is two things. Okay. I can say 1, based on the height of the pullback here, this pullback right here, we've got a pattern target of 0.8087. If this is a 1 and a 2, which we don't know at the moment here, right? There's no really to know yet. That would give us a minimum expected wave 3 target at 0.9932, wave 5 at 1.1132. Okay. Zoom into the 15-minute here. I can do one more thing here. We've got this resistance level here. You can measure out this whole kind of area. And you can look up here around 200%. So, but that 200% is that 1618. So I think there's a good chance that we could see that move up there toward, 0.99, 1.11, at least up to that area. Right here, this may actually just be 1, 2, 3, 4, 5, or nearing 5 as a leading diagonal. See, there's so much here that's really not sure of just yet. We're going to have to wait and see. But if we can get some pullback here, let me see. Yeah, pullback right about there. Yeah. Yeah, again, 1.12, maybe even 1.289, depending on where this ends. This looks like it's maybe a 1, 2, 3, 4, and we're finishing 5 as a leading diagonal, which will get a pullback maybe to around 64, 65 cents here. And then that would be a 1 and a 2. And like I said, getting up here 5 waves up, maybe at $1.28, $1.29, maybe a little bit higher depending on how high we're pushing here. So we're really just going to have to see. There's just no real, other than that, there's no real, what do you call it here? No real information to really work off of. Let me see here. Yeah, this may even be 1, 2, 3, 4, 5. We need more information going on to really kind of tell us. But I think if you're looking up toward those higher levels, for right now, I think it's a great place to start, and probably head up even higher than that. Let's see here. Most asked question I get is, what asset should I invest for best return? My answer is always invest in yourself, exponential growth, and you have more control of the outcome. Absolutely. That's a great answer. Yeah, because instead of just one person's idea of one asset right now, if you invest in yourself to learn how to do it yourself, then all you have, then for the rest of your life, you have the opportunity to create your own returns for the rest of your life without leaning on somebody else's opinion. Or you can look at what somebody else's opinion is and decide with your knowledge and your experience, does that sound correct or not? Yeah. I love that. I love that. Let me see here. XLM. What we got going on here? I was looking at 2 possibilities here, either a 1, 2 heading up or an A, B, C, D, E. And this is on the monthly. Either way, if just real quick here, if this is a 1, 2, 3, 4 here, potentially 5, that gives us a pattern target based on the height of the pullback here at 1.3, $1.30. If this is going to be a triangle here, that would give us a pattern target based on how that pullback up there about $8. So yeah, potentially up there toward $8, but locally I'm just looking for a target initially here at $1.30. Right now we're at about 38, 39 cents, so that would be a nice move up. Locally, looks like we got 1, 2, 3, 4. We'll probably get a 5 again up to the resistance, right? Something I've already talked about. And then that would give us here a 1 and a 2 pullback probably to the pivot here at about 35 cents or so. And where does that come out? Feel like a 1 there, 2 on that pullback. 321. So yeah, so I would look at $1.30, 321, and then $8 or so. It's kind of like my targets based off what we're looking at there. All right. Naka. So Naka, it's pulled back to the weekly, well, yearly pivot, I guess. Let me see here. $9.19. Come on. Actually, I think maybe it's the, oh no, here it is. Yeah. It's the monthly pivot. I think locally here, as long as this low holds right around this monthly S1 pivot, we should at least fill in this gap here at about 275. And that gives us the opportunity to fill in this gap up here at around 393, and then this gap up here at around 483. I think if you're breaking out, I think breaking out here above this swing high at 858 is going to go a long way towards suggesting the low is in. It's going to break out higher, new all-time highs. But, again, we do have some bullish divergence printing to that low there. So we have lower lows in price. We got higher lows on our RSI on the daily. Capitulation type volume on this breakdown, this gap down into the support. So a lot of reasons suggesting that's the low there. So yeah, but those would be the levels I'd watch here locally for further movement on Naka. I can't say you always ask for the same ones now. Sure I can, if most of them are still the same ones. But anyway, yeah, so I mean, that's kind of what I'm thinking here, right? Again, keep watching the IWM. As long as it's heading higher, I mean, in general, larger time frames, the idea that a recession is here is pretty likely not to be correct. Okay. But everything else, I mean, again, guys, you can sit here and you can learn parlor tricks over and over and over again, or you can actually take the time and put in the effort to learn, what's going on with markets. Why are they actually moving? Get an understanding of that, because that allows you to do so much more with everything else. Somebody's, the indicators you use, if somebody's got a proprietary indicator, if somebody has a specific strategy that they trade, you can then use that knowledge to understand, is it worth the time? And if it is, when is it likely not to work versus when is it to work? Because nothing works 100% of the time. But the more you understand about markets and the way that they move and what's going on, the better, more prepared you are, more well positioned you are to decide if you want to use that particular strategy right there or not. Because nothing's 100%, right? Nothing that you're going to learn as far as strategies and indicators go are going to tell you 100% what's going to happen. Okay. So we would love to have you there. We got some crazy people in there. You see Bernardo here. Bernardo's crazy. He's from South America. We love him to death. But take half of what he says with a grain of salt. He's a cut up. But yeah, him, Mr. Awesome, Sats. These are guys that are in our, in our trading academy. And ask them if they're, glad that they joined us or not. That'll do better than me telling you, right? But I do share them occasionally when something's said in the trading academy. I'll share it with you guys so you can see, because it's better than me saying it, right? You guys go like, yeah, whatever, Chris, you're just saying it because. I'm saying it because that's what everybody else is saying. So, by the way, guys, listen, you can catch me on Wednesdays, same time, same channel here for Beards and Bitcoin, that I host there with Andrew and Tillman from Arch Public. And that's a whole lot of fun. We cut up. That's like edutainment, I guess. A little bit of education and a lot of entertainment. Just got you. It's like if the three of us were just sitting around talking about things, what would it be like? So there's a lot of cutting up going on in there and a lot of information. Mr. Awesome, you had a 5-hour trade today. Did you post it there in the live trading chat there at the Academy? He says, I did nothing the rest of the day. I love it. See how easy that is? Get your 5-hour trades. But Mr. Awesome, man, he's usually getting 100+ points a day. Also, it's crazy. But he's always there with us with the live trading. But yeah, so we do that. And then also, guys, listen, I've started doing this. If you want some more kind of information, more stuff about trading, things that you need to know, I've joined in, and I continue to join in every Tuesday. There's a Traders Tuesday. I think they're going to kill me. I think it's called Quantum Economics is the company that does it. And the hosts are Matt Case and Matt Hatter. And I really have a lot of fun doing that. You got some great guys in there like TradeFly and Bits of Wealth that are in there as well. They usually tend to show up in others. And so, again, if you're new to trading, just trying to figure out what's real and what's like just nonsense out there that you hear, show up for that. I don't get anything for telling you guys about that. I just think it's a great place that if you're really serious about learning to trade, that should be the first place that you go. Besides here, right? Anyway, hey guys, do me a favor, hit the thumbs up, hit the like, hit the subscribe, follow me, TX West Capital there on X. And I've gotten into posting more and more threads lately. I don't know if that's what they're called now, that it's not Twitter, but about trading and about different things, Bitcoin and, economics and stuff like that. So if you're interested in that type of stuff, jump on there, follow me. Other than that, head over to members.texaswestcapital.com. Use the code 550FF, 55 off, and you'll get 55% off our liquidity cartography program. And man, oh man, you're going to, with that 55% off, you're going to pay a lot less than what just courses are. And we've got hundreds of hours of course stuff in there for you, as well as 3 times weekly training and 3 times weekly live trading that I do. Plus, again, you get access to Fibbo and his stuff as well. And we've got traders in there like Vince and Andrew who show up and just give you amazing trades and analysis throughout the day and throughout the week as well, as myself and Fibbo. So, if you get there and you say there just isn't enough information, I know you haven't really looked, because I don't know of anybody that does anywhere near as much as we do. And they sure as heck can't do it for the price that we do it for, especially with this 55% off. So anyway, we'd love to see you there. Mr. Awesome says those weekly live trainings changed my life. So there you go. There you go, guys. These are guys that are in there telling you what they, how they feel about it, honestly. And how do we know that it works? Because they continue to stick around. You can be next. All right, listen, guys. I hope you all have an amazing weekend. Trade safe. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. Don't fall into the definitive, the top is in, or it has to be in the next month or so. While that is a possibility, let's continue to work with the information that comes out, because I think we've got, a lot higher targets for all-time highs for a lot of these. Okay? All right, y'all trade safe. Have a great weekend. And hopefully I'll see you there at the Trading Academy. If you do show up, please say hi. I'd love to say hi and learn more about you and figure out how we can help you best, all right? Take care, everybody.
Trading tip: always manage risk before chasing gains.